condition of the property was pretty poor. So I thought, if I'm going to do the bathroom, I might as well do the rest of the house. Strip off the floors as well. So it had like old vinyl flooring, some tiles in the kitchen, and some old floorboards. So what we did was strip everything out and put down engineered floorboards, which was a bit more cost effective. Hey guys, in this video I'll share with you my journey of buying a property in Melbourne and how I made $150,000 in equity in the Victoria property market in just 12 months. I'm Jai Ko, mortgage broker, property investor and founder of JD Capital. Today, I'm taking you behind the scenes of one of our Melbourne property renovations, where we turned a pretty dated 3-bedroom house into something much nicer. I'll show you exactly how I bought this property, the renovations we made to get it rental ready, the budgeting, the process, and everything in between. Whether you're a new investor or just curious about property renovations, stick around. There's a lot of lessons, tips, and real numbers that I'll share that you won't want to miss. So let's talk through the numbers. The purchase price was $570,000. This was made in October 2024. It was in a suburb called Meadow Heights. It's about 25 kilometers north of Melbourne. The rental income at the time was only $420 a week. I spent $40,000 on the renovation. What I did was 2 bathroom renovations, so full strip out and renovate. And the reason why I wanted to renovate the bathrooms was because there was a lot of waterproofing issues and water leaks. And the tenant that had moved out of the property, it sat vacant for about a month, and I decided to renovate the property mainly because the condition of the property was pretty poor. So I thought, if I'm going to do the bathroom, I might as well do the rest of the house. So we also did strip off the floors as well. So it had like old vinyl flooring, some tiles in the kitchen, and some old floorboards. So what we did was strip everything out and put down engineered floorboards, which was a bit more cost effective. Downlights to make the lighting better. So got rid of the oyster lights. Some of them were just light bulbs sticking out of the ceilings. We changed some of the doorknobs in the kitchen from black ones to stainless steel ones, changed the oven, did a bit of maintenance work around the property. The gutters were pretty worn. The gardening was also pretty bad. There was a retaining wall that was about to fall off. The front facade was a bit dated. The paint on the windows was stripping. So I decided to paint the front facade just to give that a bit of a go as well. Turned out okay. Would I do it again? Maybe not, but it did change the facade and painted the windows, just fresh liquor paint everywhere. And the property looks amazing. Before and after, throughout the renovation journey, you'll see the difference. So total reno spend was $40,000. I found someone on High Pages. Highly recommend, if you guys want to do a renovation, reach out to some of the tradespeople on High Pages and get a couple of quotes. Because what I realized was the quotes on High Pages were a lot cheaper. Rent post-renovation went up to $550 a week. Property next door sold for $718,000 in November 2025, exactly 1 year after I purchased it. So that's a $148,000 equity uplift. If I take away the renovation spend, that's $108,000 net profit. And that equates to about a 5% rental yield. And when I purchased the property, it was previously a sub 4% rental yield. A lot of people were telling me at the time, why buy in Melbourne? And this was 2024, people were a little bit hesitant. My portfolio was already quite diversified. We had properties in WA, in Queensland, New South Wales, and I wanted to find value. And I decided to look into Melbourne, and there was a lot of talk around people investing in the area of Broadmeadows because the yields there were quite good. You could get a 6% rental yield. So what I decided to do was actually go drive around these areas and see what it was like. So physically went to Broadmeadows, drove around Broadmeadows, Dallas, and Meadow Heights area, and also Roxburgh Park. What I realized was the area in Dallas and also the area in Broadmeadows was pretty rough, right? Lower socioeconomic areas, got a lot of housing commission, and you can really see a lot of the properties there were not taken care of. However, when I started driving a little bit further, drove towards Meadow Heights and Roxburgh Park, suddenly you could see the difference was night and day. You could see that properties were really being taken care of in terms of gardening, it was well maintained, and you could just tell that these properties were largely owner-occupier. And one of the things that I like to look for when I'm researching suburbs is what is the owner-occupier to tenant ratio. In Meadow Heights, it favors owner-occupier. The skew is more higher. So that gave me confidence. The vacancy rate was also pretty low, so sub 1%, I think at the time, or sub 2%. And the numbers just tick the box. If I can get close to a 5% yield and also buy an area where there's high owner-occupier appeal, days on markets were decreasing, there was not too much stock, vacancy rates were low, I knew that I could generate some equity uplift in this area. And why Melbourne? For me, it was just looking for value. Where can I find houses that were sub $600,000 on a freestanding block? So this property was about 500 square meters, 3 bedroom, 1 bath and car space. And to me, this presented good value, because the areas that I was buying in and the areas that I was typically looking at, they had gone above $600,000, $700,000, and it was harder to get that 5% yield. So I started looking into Melbourne, and that's how I ultimately decided to land in the suburb of Meadow Heights. Today, the suburb median is close to $700,000. I also wanted to share with you guys that at the time when I was trying to buy this property, I couldn't get lending through a major bank. I had to go to a tier 2 lender to get the lending. And a tier 2 lender at that time, the interest rate at 2024 was around 7%. So it actually cost me a lot of money to hold this property. It was around $2,000 a month holding cost, because in Melbourne, you've also got additional costs like land tax as well. This property cost me money short term, but I knew that if I secured the property in today's price at 570K, even though I'm paying a higher rate at 7%, I knew that later on I could refinance my loan after a year, which I did, back to a major bank, because I knew my income trajectory was increasing. And if I could manufacture growth through equity and also through rent, I can then pull the equity out later to then cover my cost of doing the renovation, which I did after a year. So that's how you can strategically map out how you can leverage into a property, but understanding that in the beginning, it's going to be a bit of a short-term cost. It's a short-term cost for long-term gain. I also wanted to share a bit about the renovation strategy as well. So in my previous podcasts and videos, I have shared a bit about my renovation strategy. For me, the way that I like to target renovations is very much cosmetic. And the reason I do cosmetic renovations is because they're easy to plan, easy to get trades, and it doesn't take long. This renovation took around 6 weeks. I think I could have done it in a quicker time frame, but there was a couple of things that I needed some other trades to do, and there was a couple of things that dragged on a little bit longer. But generally speaking, cosmetic renovations, I think you can get in and out within a couple of weeks maximum. So this renovation took a little bit longer because we're doing 2 full bathrooms, so about 6 weeks. And it took about 8 weeks in total to rent out. So my strategy and philosophy around property investing is looking at where you can add maximum value. And the cosmetic renovations for me is one of the best strategies, because you can force growth and you can also force rental income in any market. All right, regardless if the market is going up or down, you just have to look at discrepancies. So if you can find area where a renovated property is worth more than a unrenovated property for a similar spec, you'll find that there is potential in that margin that you can make, right? And you've got to make sure you can do the numbers. So for example, if I buy this property at $570,000, I spend $40,000 to do the renovation, I've got to make sure that I can make that money back, right? So I need to have a look at that suburb. Are there any properties in that area that have a higher sale price of a renovated property with a similar spec, all right? And that's how I do my due diligence. The renovation, I'll drop some photos. We did the bathroom renovation. It was quite dated, quite old. Some of the tiles have been replaced before, and you can see at the bottom of the shower there, they had some water leaking. When I did the building and pest inspection at the time, the building and pest inspector did warn me that there are some high moisture in this building, and it's mainly because of the waterproofing issues. So I knew at some stage I definitely would have to go do the bathroom, and I thought the perfect time to do it is the tenant wanted to move out and there was a lot of mold in the property, so I thought this was a perfect time to go execute the renovation, because I knew that if I rented out in the current condition, my rent wouldn't change much, right? I'd probably have to drop the rent because it's in a worse condition, but after doing the renovation, I was able to increase the rent quite a fair bit. So that was the strategy, to go do the bathrooms, to go do the flooring, the lighting, and just focus on cosmetic, right? Nothing that was really structural. And one thing that I want to point out about buying in Melbourne is the holding costs are a little bit higher, right? Because you need to understand that Melbourne, there are land tax rules that property investors will need to pay. And it's not a significant amount, but you just need to make sure that when you're buying this property, you are factoring in the annual holding cost of land tax. I think the land tax for this property was only around $2,000 a year, but as the land is worth more and more over time, the land tax will increase. And the more properties you own in Melbourne, the more land tax you also have. And if you do decide to buy a property within Victoria that is under a trust structure, you also need to be mindful that you have additional land tax under a trust ownership. The other thing is that in Victoria, there are a lot of new rental reforms. Now, these are rental reforms to protect the tenants. In my opinion, it's not a bad thing because during the time that I was doing this renovation, I was actually living in Victoria as a tenant, and I can tell you that it is really, really a peace of mind, right? Because when you move into a property in Victoria as a tenant, you go to a property that is safe. It ticks all the compliance. And as landlords, you need to pay for that. So you got to do electrical compliance, gas compliance, water compliance, a lot of other things to make sure that the property is safe and sound. So a lot of these additional costs ultimately mean more expenses for the landlord, right, as a property investor. So that's also one of the reasons why a lot of people were selling during Victoria when the rate rises were going up, just because the holding costs of the properties and the property prices were not moving up. So a lot of investors were cashing out. But that presents an opportunity, right? When there are people selling, it also means there are opportunities for people to buy into that market at a potentially good price. That's also one of the other reasons that I wanted to buy in Melbourne, because at that time, it wasn't really a market that a lot of people were focusing on. And in my previous video, I also talked about one of the lessons to be a top 1% investor is to not follow the herd, right? You want to generally try and do the opposite what the mass are doing, right? Because that's where you have a competitive advantage, and also you're not competing with hundreds and thousands of other buyers as well. Fortunately, I didn't have any renovation issues during this time. It was more just finding trades, and High Pages was a really good way for me to get tradespeople. I did use a builder to do the bathrooms, and then I got a flooring guy to do the flooring. I got an electrician to do the lights as well, and all the maintenance things was also done by the builder. And the reason why I went down with the builder is because the price that I was able to get was actually quite competitive. So I got 2 quotes, compared the quotes just to make sure that I'm not being ripped off. And High Pages, you do save a bit of money. And so that's a bit about my story. I wanted to share that with you guys, show you that buying in Melbourne can be lucrative. Right? At the time, this is 2024. So I wanted to share with you my journey, and yeah, see you guys in the next video.